here with, is the PPI going to take some wind out of the sail? Hear back from Chris. He'll take over the show just after this quick break. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hey everybody, happy Friday. Is tech gonna rip? I think the answer to that is we'll see. What I'm really paying attention to is this. The market is trying to just shrug off what happened yesterday because it was pretty much bizarro land, which I thought was interesting. Check this out. Why does my screen? All right, hang on a second. Screencast is going away. Give me a quick AV check. We're coming through loud and clear. This was what yesterday's heat map looked like. So a couple of very interesting things. You look at Wednesday's trading, where we had a bit of a pop off top, and the market was pretty directional on Wednesday, and nothing really happened in a bad way. Everything was up for the most part. We had 11 of 11 sectors closing green, and then all that flipped, where we had the storied can do no wrong, the greatest stocks in the world to ever own, the reason the market's up this year. Everything was red, but everything else was okay. So I call it bizarro because what's been working and this like highly concentrated narrow market completely flipped yesterday. And the nice thing is, after this happened, I actually had one of my best days ever yesterday, and I reached some new watermark highs on all my portfolios that I manage. So I can say I was fairly prepared for that to happen. Now the question is there going to be follow through? I think right now the market is stoked to have trending lower inflation data, and loving the fact that the probabilities of the Fed watch or the Fed watch tool keep going higher. The Fed rate cut probably happening in September. We'll find out. Is this a rotation away from the Mag 7? Maybe. I think your big key and takeaway is, okay, so the SPY's up a little bit today. We opened up around 557, which means we just kind of contained the damage a little bit, but we're not making highs yet. Here's the intraday price action. So for this week, we've had one big directional day, right? We had Monday, very quiet. Tuesday, very quiet. Wednesday was a directional day. Thursday was a directional day. And then I'm curious to see if Friday is Friday also going to be a directional day, or is today, we had a high low from yesterday. We're at the halfway point right now. The rest of the day is going to be really important to watch in the SPY, because if we reject that 560 level and we settle in near the lows of the week, okay, which is right around Monday and Thursday's low, if we settle in there, something tells me that next week, either taking out the high or the low. If we take out next week, okay, next week's trading, if we take out the low from this week, that brings in a big fat drop from, let's say, 554 lows to 542 lows. That's a big area for the bears to take over. All right. So my thoughts here, if we kind of hold this 560 level and finish near the lows of the week, this is how I'm approaching next week. Do we break the highs? Do we break the lows from this week's trading? Breaking the lows means way more bearishness for possibly another 10 to 15 points. We could see some decent cleansing on these markets after being up, 17%, 25%. It's not unrealistic to see a 3, 4, 5% correction, just like we had back in April, 6 to 8%. It's not unreasonable to think we could have a 7, 8, 10% correction if things get a little bit wonky. But that's where I'm at for the SPY today. Okay. If I go to the Qs, same type of thing, right? We had a huge sell-off yesterday, over 2% down from high to low. It read over 2% in the red, but it was like a 2.5% sell-off. That was a massive drop in the Qs yesterday. Highs around 504, lows around 491. So we had was that a double-digit day yesterday from top to bottom? I think it was. Yes, it was. Wow, that's crazy. That's a almost $13 move from high to low yesterday. Oof. If I had anybody trading some intraday or zero DT QQQ or intraday NQ MNQ, man, good opportunities there to be get some market love. So how about decision for now? Well, like I said, we have a high, we have a low. If this market from a high to low, because it did some technical damage on these recent pushes from Monday, Tuesday, and Wednesday, if this is doing some damage and this is just a pullback, next week is going to be important to watch. Does it take out the low, take out the high? Right? Same type of idea. If we take out the low, I would say I want to be bearish on the NASDAQ. If we stall around here, we have no decision. I mean, I don't know what's going to happen next week, but I have a plan for if something's going to happen. We stay sideways, we probably stay sideways. We might not justify breaking higher highs yet. We break the lows, easily bearish on the NASDAQ, in my opinion. Okay. One other instrument I want to look at. It shows that it's still alive and well. It shows that the market actually cares, and it's the small caps. Okay, the Russell, big move to the upside. Look, I just showed you two giant red days on the SPY and the Qs, right? Look at the old Russell. Russell had one of the best days of the year. This thing has ripped from 203 to now 213. It's up $10. From a percentage standpoint, that is way more than the Qs, right? This thing is up 5%. Right, we had a 2% sell-off in the NASDAQ, and this thing's up 5% in the last 24 hours, essentially. Pretty crazy stuff. So I like the Russell, and here is my plan of attack on the Russell. So we're up. I'm going to take a look and see how my Russell's doing right now. I might have some. Man, this was not giving me problems yesterday. Let me see. So I don't know if this is just a bad sign on with Tasty, but let me log back into my Tasty platform. But directionally, I'm long in the Russell, and these trades are starting to rip really nicely. So let me get back into. Maybe it's better if I log into them while I'm not running streaming services and having a bunch of applications running. Speaking of Tasty, if anybody's in the, I said this with my session this morning. If anybody's in the Chicago area, I'll be at a Tasty event this Saturday at Park West. So either one, sign up for the Tasty event and come join me, or two, if you're around the Chicago area, I'll meet up with you, grab a drink, grab a coffee, whatever. I got family in town that's coming to meet me Saturday as well. So anybody's in the Chicago area, let me know. Hit me up on my Discord, and we can arrange a little meetup. So just throwing it out there for anybody. All right, let me get into my platform here. Hopefully it doesn't give me a bunch of lag. All right. Okay. So logging in there, just want to get a read. I want to get a read on my P&L. So yesterday was a really good day P&L wise. I'm up to new highs in my portfolio. Today was up another $12,000-$13,000. Should be another high in my portfolio. Their oil's up, the small caps are up. Like there's a big. What I've been watching on the Russell is this. I said the same thing on the Dow. If the Russell can break this level, okay, to me this was a getting okay. I do not want to see the Russell come back and try to fill a gap. I don't, because that would be a rejection of this ascending wedge. This is symmetry all the way up here towards around 231. So I am long, and I have a position right now. I have a 185 long call by a 225 long call. So I'm going after $40 of credit. All right. And I mean, I paid for the trade, but I'm lowering the cost basis with some sells against this. But out to July, I mean, I've lowered the cost basis. I'm here, IWM. There we go. There we go. Looking a little bit cleaner now. a day, not too shabby. And let's go here. IWM. This is just one account. I have a variety of trades here, but my 185 by the 225, I paid. So I know on that particular trade, the 185 by 225, that was a debit of 31.20. Okay, so I'm going after $40 of credit. And I think I lowered the cost basis again. So that was a 185 by 223. And then from May to July, okay, so I'm doing the numbers here. So 31.20 was the debit spread. I'm giving myself $40 of upside, which means I've got $8.80 of profit potential. I then lowered the cost basis by another 86 cents. So my break even is 30.34 for a $40 max credit. This is a July 19th, so this is next Friday. I doubt we're getting to 225. Okay, I'm going to let this expire next Friday, and hopefully, I mean, if we get to 225, I'll make 40 bucks, and I'll make $9.60 a contract, which is fine. But what I'd like to see is if we are up, there's a couple ways I can trade the Russell. I can still add a 225. I'm measuring the move out to like 231. So I might look out another 30 to 45 days, sell against this, try to collect some decent credit. So let me see right now. Let's say next Friday, the IWM expires. By the way, who's here? I've got comment here. Good. Yes. Lee's the last comment that I saw. I just want to make sure. Do we have some traders out there looking for some gold, some silver, some dollar? Give me some comments in the chat. Just want to make sure that I'm not just talking to myself here. If I am, that's fine too. I do it for 5 hours a day anyway. All right. So if I go out, so next week will be a 7-day cycle. If I go out to August 16th or maybe the end of August into August 30th on the Russell, I could probably get a decent credit here. Decent amount, 225. If I keep the same strike price, I can lower that by another 250. I want to give myself more potential to the upside. I'm measuring symmetry out to 230. So I'll probably take like the 230 or 235, give myself another $5 or $10 of upside potential on that debit spread, while also lowering the cost basis by another, let's say anywhere between 90 cents and $2.50, give or take. All right. So I don't need to do anything right now, but I'm going to try to let the Russell rip. This is one of my kind of favorite instruments to trade for the moment, because this breakout is pretty key. And the nice thing about this is if I zoom out, and that is based on the Q4 rip from last year, and that is right here. So we have low to high, higher low to higher high. That's symmetry at 230. Okay. We have all-time highs just above the 240 handle. What I am looking for here is this the market's ability to catch up? Is the small cap going to rip in a big way and catch up and hit these highs? Look, the S&P and the NASDAQ might still reclaim those highs, or they might be completely sideways while the Russell is making up for lost time and lost ground, right? The Russell has been underperforming. It's up 1%, and all of a sudden it's up 6% for the year. It is quickly closing the gap between small cap, large cap. I think that's pretty exciting, because for a while, all we kept seeing was, you got to buy the Mag 7, you got to buy the Mag 7, got to buy the Mag 7. That's it. And so yesterday it finally switched things up. So I think that, that's a bit of a forced move to kind of jockey things around, maybe cause some inflows, some outflows. I mean, I don't know if this is all going to come into the broader market now, or if we're going to start to see more flows into bonds. Bonds would be more like risk off trading, so I don't necessarily see that. But flowing into small cap would be a little bit more exciting, because we're not measuring all-time highs. We're not like you're drifting into orbit, right? What you have here is a measured move to 231, an all-time high at 245. Okay. I like the idea that I could trade this thing for the next $20 to $30 of upside and use the futures market, use options, capitalize on leverage, generate some extra income, and get a good return on capital. Okay. So I like the Russell a lot, and I'm going to be paying close attention to that. Next week's trading, for example, on the Russell, okay, very different low to high, isn't it? If we break next week's high, I'm looking for higher highs. Easy way to trade that. If we're trading at 214, I will probably just do a debit spread where I go down about $4 or $5. If we're, I said this in my session earlier. If we're trading at 214, I'll probably look at buying the 209. Okay, and then go, so that'd be like down $5. I'm in the money on a call, and then I'll go up $5 and I'll sell the 219. So if I pay like, $4 to $5 for the spread, and I'm getting myself maybe another $4 to $5 of upside, that's essentially a 1-to-1, right? But a higher probability with the market drifting higher. If I want to go out, I don't love that trade for just a week. I would probably go out 14 to 21 days, but give myself that credit and probably stagger a couple trades on top of that. So let me see what that price would cost me if I want to do that for, let me look here. So if I just did the trade now, 35 days out, 28 days out, let's go 35 days to the August monthly. So right now we're trading at 214. Let me see what type of intrinsic value I can get. So if I did, let's say a 209, we're trading at 214.50. I'll buy the 209 or the 210. If I buy the 210, it's a little bit cheaper. If I sell the 220, that's exactly what I'm talking about, right? So I can buy the 210, sell the 220. I give myself $5 of upside. Okay. I give myself $5 of upside. So if the Russell stays where it is for the next 30 days, stays exactly where it is, I still keep my $5. So there's very little risk on this if this price stays sideways. Okay. If it goes down a little bit, I'll be down a couple of bucks. But if we stay where we are and we rip higher, we could get this called away at 220. We can risk $5, which is basically like, I think we're going to risk like a break even. It's probably not going to go too much lower. If we're truly going to see a move to symmetry, and it's going to do this quickly, then I'm looking for the Russell to play catch up. So this isn't a bad trade to get in. It's going to cost $5. We have $5 of upside. If you want to go a little bit higher, okay, you can sell the 225. Now it costs you $6 to make $15. So you can see here, if you see my numbers, my risk is 642, but I'm still maintaining about $4.50 of intrinsic value built into this option trade, and then $8.59 would be my net profit. So I give myself a greater reward than risk, which isn't bad. And I give myself, 35 days. If this thing's going to rip, I want to try to give the bulls a chance to run. So the couple ways I can trade that going into next week. All right. So we'll talk that. Let's talk charts. I saw some requests coming in: dollar, yen, gold. Okay. Yeah, the currency strength. So I mean, the yen's crazy right now. So look, yen is friggin' nuts. Look at this thing. So we were up in the morning, down in the morning, up again. Good luck trying to catch every little swing on the yen. I'm telling you, keep the yen crosses simple. Okay. Go to your higher time frame. If you're, and I get it, like it's attractive. You're trying to scalp it. Just be careful, right? Trade it small. But I'm telling you, when this thing is giving us clear signs, okay, when it's giving us clear signs, that's the trade that I'm looking at. Okay, go 1 second here. I mean, I'm happy that we had a big sell-off day yesterday. I'm sure that anyone that's been in the yen that's been hoping for yen strength is way happier, but that's not me. I'm just waiting. If the yen is going to get stronger, to me, this is when it's easy to trade. Okay. Right now, as you're guessing at the top, you're getting some signs of confirmation. Okay. But is it breaking all these levels? I mean, remember, this has been in an uptrend. Okay. This blew off the top after intervention. There's no guarantee that this Japanese yen has to get stronger. Okay. So, and again, if you are looking to sell the Aussie yen or sell the dollar yen or sell anything with the yen, brokers are still going to charge you to sell it. So you better hope that you get this thing nailed for short-term opportunities, because if you're going to hold this thing indefinitely, and the yen's going to get stronger, I'm going to hold it, you're going to pay for it. Negative swap is a real turd right now. And I wouldn't want to be stuck holding the yen for months and months and months. It could be very costly. All right. So that being said, if we start to see this trade pan out to the downside, you are expecting higher volatility. That is the good thing. That's the trade-off. Rather than paying for negative swap, which you're going to have to if you're holding, at least the volatility should increase. Okay? Is the pound yen positively correlated to DXY? No. Pound yen is its own thing. Pound yen is more yen related. Look at the yen. Look at all the yen pairs. Pound yen is its own thing, just like the yen is. Dollar index is its own thing. I mean, every dollar pair is doing different stuff right now. We'll talk about that in just a second. But making sense? Whatever. Okay. So Aussie yen, do you see my chart? This is my question. Is there a reason to be crazy short on the Aussie yen right now? No. Because if we're going to get short, there should be plenty of opportunity here to go from, like, let's say 106 to 102, right? If we break this outer trend line, then we go from 106 to, who knows, maybe it takes out this low at 98, right? If we put in a big fat topping pattern like this, guess what? Easiest sell in the world. To see a top, confirm a top, trade a top, it all materializes into something we can trade. But right now we are wondering, is this the trade? And everyone's all excited that we're finally starting to see bearishness for the first time in weeks. But I'm telling you, I would not want to be holding this thing short. Okay? Not until there's confirmation. You get a bear flag in there, take a good trade, get your thing in profit, move your stop loss, and let it run. That's the best way to trade the yen pairs is get a trade in that you like, trade it small, define the risk, let the thing run when you're up 50 to 100 pips and see if it never comes back. Sometimes that's the easiest way to trade the yen. And it's not easy, okay? Go to your CAD yen. Okay? CAD yen, same thing. 2 big days of selling. Well, we had 3 big days of selling in April. Is this breaking any structure on the CAD yen? There's a low, there's a low, there's a low. If all this is 2 to 3 days of selling for the market to pick it right back up and make new highs, we can have this conversation in 1 or 2 weeks and it's like the yen's at all-time highs again, you know, or the yen's at highs again. Well, that stupid intervention was pointless. Exactly. So it's not quite confirmed that this thing is deleveraging, the carry trade is over and done with. Not yet. Okay. So watch the charts. Swiss yen was one of my favorite setups as far as the sell trade goes. We were watching the structure very closely this week in my flex trading room. We sold off. There's some follow through. This one to me looks pretty good for a postured bear flag. Okay. So we had a trade in. We have, had a trade in here. I believe, let me check if I'm still in the Swiss yen. I might have gotten stopped out of break even on that noise. Let me double check. All right, I'm going to check my broker platform here. I think I went to break even or better on it. Yep. So I got stopped out of break even. But this is one that I could justify a sell trade. Not right now. I'm not selling at the low. I mean, if this thing comes right back up and snaps, well, there's a couple ways to look at this trade. We have 2 days of selling. If we snap back here, I could put a stop sell right there and not even worry about it. If it gets filled, I'll look for that direction with a tight stop loss. Right? Not complicated. If we sell off here and we pull back, awesome. If we pull back to the top again, look for a rounded top, sell it nice and high, see if we get that trade to go sideways, right? It went sideways for a while, but there's lots of open space here. Inner to outer trend line, we can come all the way back down here to 170 or 168. That's 600 to 800 pips away. So I'm not trying to get super into and all in on like the Swiss right now. Swiss yen, it's a good looking setup, but do I get a pullback first? Do I get a sell that I want? Do I get a bear flag that I can sell? That's what I'll be watching. Euro yen. Okay. Euro yen, same thing. Still hasn't broken any trend line structure. So yes, it's exciting. Bears to take over. We really got to do something here, put in a topping pattern. I don't see it yet. Okay, pound yen. I see the request coming in. I see the NASDAQ. I see Nikkei. I'll take a look at those. Nikkei's down like 2.5% today. We poked some all-time highs this week. We gave some of it back. Another reason the yen's getting a little bit stronger. Nikkei is going to, and that's the correlation we typically see. If the Nikkei is down and down heavy, the Japanese yen typically gets stronger. You know, so is it short term? I'm sure that in Japan, they'd love to see the Nikkei at all-time highs for the first time since 1984 or 1989. No, 1989. 34 years of drawdowns. And we finally made all-time highs. So I'm sure for the index, it'd be nice to see, all-time highs continue, which means the yen doesn't necessarily stick around with a bunch of strength. Okay, but there's some strong support. Look at previous highs. We'll talk about that in a moment. Pound yen, look at the trend line. It's right at it. Does it react here? Sure. Does it react there and go up? Maybe. Does it react here and drift sideways and break the trend line for bear flag? Maybe. I don't know. I'm just watching price. Look, nobody can tell me the top is in. You all know that you can't call tops in these markets because you can be wrong many times. New Zealand yen, sure. New Zealand is weak this week. The JPY has gotten stronger the last couple of days. Does this do any damage? A little bit. Doesn't mean anything, right? This could come right back to this previous high and then go back up to highs. Why? Positive carry, cash trade. Dollar yen, probably everybody's benchmark. It's kind of my barometer. Do I think 160 is this key level? I mean, it's interesting. We went from 160 to 162, and we also went from 150 to 152 back in 2022. We saw the yen have a big correction from the 150 intervention to the 152 intervention, and then we actually saw this go. But seasonally, this happened at the end of the year. Right now, this is July. I don't know if this dollar yen is going to gravitate towards this outer trend line or if this is intervention, but we're talking about this again at 165, 170, 175 before there's a bigger unraveling. So would I be shocked to see the dollar yen sell off and then go right back up? Not really. Would you be surprised? How many of you out there be like, there's no way the Japanese yen is going to get strong or the Japanese yen is going to stay weak? I don't think anybody knows, right? Unless you are, in the know for everything that the BOJ does, you have no clue, right? So all you can do is watch price action, trade small, define your risk, and not make any stupid decisions. I think the yen has given us some good volatility. That's exciting, but there's no real clear trade, in my opinion, yet. As far as the bigger move, I like to trade open spaces in Forex. Okay. For me to have one day, I'm not that excited about one day. Okay. I'm looking to see what can I get for the next week or two? What can I get for the next month or two? I want open spaces. That to me is the easier trade. All right. Other currencies, sure. Let me get to the earlier questions. Nikkei and Nasdaq. And so we go QQQ. Actually, Qs are pretty easy right here. I think this is a good way to look at the Qs for next week. So I want to say I talked about this early in the session, but maybe my request came in late. So we have a high for the week, we have a low for the week, and we're trading right here for today. To me, next week's trading is if we break the low next week, there is lots of potential downside on the NASDAQ. Okay, now I say if we break the low. I'm not trying to call this as the top. Okay, what I'm looking for is we have high to low. This is pulling right back into a typical fib zone, 38250 pullback area, right? If we break the lows, you can see that the previous week is way down here. So is this market going to bearishly go after some previous levels, and will this take out some structural lows? I didn't draw that very well, but something like that. If this market breaks the lows and heads down, that's where we're starting to do some damage on this run, on this rally. Now that's if we break this week's low. Okay, this week's low is established by yesterday's low. If we hang out here going into Monday, we can go up and test the highs again, and we could ignore them. This never happened, right? The Jedi mind trick of the NASDAQ didn't sell off. It's right back to the highs again. Or we can do some damage to the lows, and I think there's going to be some follow through there. We've got to pay attention. Okay, I do think this is a critical stage to see if those bulls are just relentlessly bullish by having a 2+% sell-off day and they're like, it's fine, we're going to buy the dip. That the evidence will be if we stabilize here and we go up to test the highs, bulls are still in full swing. Maybe the Russell outperforms. Maybe the Russell, if it gets back to highs, the Russell's already up to 216, 217, while the Qs are just retesting the highs again. Okay. SPY, same thing. Watching the highs and lows. Right now we're at 559. We're right around that 50% pullback zone. So here's the high, here's the low. We're right around that 50% pullback. If we hang out here for the rest of the day, next week, are we going to break all-time highs again? Or are we coming back down to test the lows? I don't know. This is what I'm watching. We break the lows. Okay, if we break the lows, guess what? There's the floor. If we break the lows, bears could be doing some damage coming into some type of trend line break like so. I had said that the floor is all the way down here at 542.50. Right now, this is past resistance, right? So could this market use, this area as a bit of a top, a bit of a stall, and the market maybe pulls back into this zone, finds support, and then we have all-time highs again? Maybe. Are the bears going to try to do more damage? I don't know. We'll find out. Okay, so watching closely. All right, Nikkei. Sure, let's talk Nikkei. So the Nikkei 225. A lot of action here for the week. This is pretty wild. So we were up. This is 40,800. All the way up to some fresh highs. It was up about 4% for the week and has given most of that back. Okay, again, Nikkei, and here's another thing to correlate with the yens. If the Nikkei takes out this week's low, and again, like Asia session is essentially done. You're looking to see what happens coming into next week's trading. If it takes out the low, I would expect JPY to get stronger, right? So if the Nikkei takes out the lows, I would look for the JPY to get stronger and have this sell-off continue. If the Nikkei comes back and just retests support, this was yesterday or the last week's high. We test this level here, we stabilize, and we start to rip higher, Japanese yen gets weaker. That's a pretty good correlation you can expect to see. The Nikkei goes up, Japanese yen goes down. Nikkei goes down, Japanese yen goes up. Not that difficult. Just check on a couple of instruments. All righty? All right, gold and silver. Sure, let me get back to the SPY here for some intraday price. And then I'll use this other workspace here for gold and silver. All right, gold and silver. And I've got my workspace and tabs right here. Gold, I still like gold to the upside. I am still bullish. Is this the beginning of the end of the dollar rally? We'll find out. Dollar index to me has to break below 103.90. I'll share that in just a moment. Gold to me is still potentially sideways. The one thing that's going to be interesting on gold is if we start to see central banks starting to cut again. Okay, now it's pretty official that the market's anticipating a high probability rate cut. We go to the Fed Watch tool, which is right here. Okay, it was up to 80+% yesterday as of the CPI data. Right now, going into September's rate decision, it is sitting at, survey says, oh my Lanta, 89.8%. Look, it wasn't that long ago. This was sitting at 45%. This market is now like basically priced in, baked in a rate cut. Okay, the problem with that is if this is buy the rumor, sell the news, that's not a good thing for the bulls, right? Now you'd think a rate cut would be good. You'd think a rate cut would allow this catch-up trade like we're seeing in the small caps right now, this rotation out of the highly concentrated, market cap, Mag 7 into other stuff. But I also wonder if there's a lot of potential movement in the small caps and catch up and rebalancing. And then as we go into the September effect, Jackson Hole, is the Fed actually going to make this decision coming into September? And then you've got Q4 up for grabs. Q4 is what? Earnings season plus a U.S. election. I mean, is the election drama going to cause a lot of turmoil and chaos in the markets? Maybe. Maybe up, maybe down. I don't know. Right? If we're up, 17% for the year, I do think it's possible that the destination this year for the S&P is going to be 20+%. I don't think it's unreasonable to think that 20+% can be hit. Okay? But I wonder, do we go from 17% down to, let's say, back to 10%, and then from there rip up and find 20% destination for the year? So do we have to have a pullback first before we can hit all-time highs with the Q4 rally, Or is this melt up, melt up, melt up, find that 20% level, and then all of a sudden the market is dumping and tanking at the end of the year as we go into maybe a tougher 2025? It's hard to, for me, it's like at this rate and at this pace, it is hard for me to be super, super bullish going into 2025. That's just me. Okay. All right. So this has jumped up from about 45% probability over the last month or so now to 90%. The market expects a Fed rate cut. I know that Powell had a 2-day testimony this week. The market doesn't care. They are pricing in, have been pricing in, are moving ahead with Fed's going to cut rates. They're justifying it with inflation data is trending lower, job numbers are softer. We're on that brink of inflation. Rates are coming down a little bit. Yields are coming down a little bit. Bond prices have been up. So yeah, market's like making a move. Now I just wonder, look at this recovery, right? 556 lows, we're already up to 560 today. Coming in next week's trading, there's the high, there's the low. This is all I'm going to watch, So, pretty wild week, to be honest. Wednesday direction, Thursday direction, Friday direction. There's some pretty good short-term trading there if you're a, options trader. Let me see if this filled up on my. So, my gamma level is still pretty light. If we came back up to 563 again, that'd be pretty darn impressive. That would get right back up to the friggin' highs from the week. Anything is possible, but man, this thing is wanting to go. If it's not going to reject here, maybe this market's interested in 562, 563. Okay, and all it was a one day pinch. The market got slapped for a day, and then it's right back up to where we started. So let's take a look at the let's see what the heat map's doing right now. Right now, heat map is, other than Meta, which gapped lower, Amazon's down slightly, but you have Apple up, Nvidia up. JP Morgan had earnings this morning. Wells Fargo had earnings this morning. Citi had earnings this morning. Those are all red. So to kick off the earnings season with investment banks, that's probably not a good sign. Next week we'll have more earnings, and I'm going to be looking to hopefully play some trades, but keep my cost basis really, really low. I'm not looking to spend a bunch of money on a bunch of earnings when we might have lackluster moves. You never know. Okay. So, all right, let's go to the advanced decline and let's take a look at a couple other things. Advancing, we have 76.4% of stocks advancing. That's pretty good versus 16.6. That feels a little bit more like a healthy broad market, right? That's good. Okay. New highs, 94% versus 5.6. Above the 50 moving average is now 70% versus 29% below. Above the 200 moving average, almost 70% versus 30. Okay, I'll throw this out there. S&P 500 finally looks like an S&P 500. This is a good sign. Okay, now, does that translate elsewhere? Let's find out. If we go into the, let's go home and see if I can translate this into other instruments. So not just the S&P 500, but can we go NASDAQ? So let me go. It's supposed to be over here. Get this stupid ad out of the way. I was looking to see what's the 1 day performance, what's the 1 week performance on the Qs. But anyway, I would say at a glance, this looks a lot healthier for a bullish market. So we're looking at Dow's back up a little bit, NASDAQ's coming back in a big way, fighting back hard. S&P's fighting, Russell's up. Russell's clearing almost 2% again today. Freaking awesome. Okay. So lots to watch, lots of activity. You good on the NASDAQ there? Okay. Any other charts, any other questions? Here's my kind of Pulver report dashboard, SPX, Qs, NDX, DIA. So your diamonds, your small cap Russell. Let's have a look here. I want to share this for a moment. I talked about this morning in my session. I might take a trade on copper right now. Maybe this is the wrong chart. Let me go back to the SPY here. Let me take a look at copper. I might have a peek at copper. 4.58 on copper futures. Let me see if I can do something out here and get this trade financed. So I'm going to go /HG. The heck? Where's my copper at? Heating oil, lean hogs. There it is. Yeah, that's what I typed in. All right, HG. So if I went out 75 days to September, interesting. Let me see. This is, I mean, it's a fairly mechanical trade. Let me see what 46 days looks like first. Could I build in? Let's see here. Let me look at my deltas. If I build in like a 10 delta right there, okay, I can get paid $387 of profit for $104,000 of risk. Probably not a good trade. I'm going to reduce the buying power a little bit here and probably put a spread on this. Let me check on a couple of things. So let's look at these numbers. So 4.19 is way down here. Okay. I could probably set this a little bit up towards 4.20, get a little bit more credit out of that. 420, let's go 420 to 415. What does that spread look like? So that's not terrible. It's not great though. $125 of income. So that it's a return of about 12% return on buying power, return on capital. 420 to 415, not bad. This might be cleaner than what I was going to do. If I looked at if I did like a crash here below 4.4, so 4.4, if I buy a put and then against that, I'll go about 50 points wide. So let's go to 4.35. So this is a little bit better. Now I have the potential to get paid. And I'll probably have to spread this out too. So I can get paid here. I can get paid here about, you know, it's about 5 points. That would be a max profit of around probably maybe $1,200. And then the naked put around $300. So let me spread this from 4.2 to 4.15. Okay, this is way better. So if I don't take this trade here, so I'm going to go 4.4 and 4.35, delete. So my safe play would be I put on a spread. I'm looking at $137 of income. But to generate a little bit more profit potential, I'm going to do this trade. So I'm essentially doing this as this is called a put condor, where what I'm doing is I'm doing a bear put spread right here in case there's any downside on copper, but I'm doing a bull put spread down here in case there's an upside and a floor on copper. So if we stay above this level, I get paid. If we stay above this level, I'm going to lose on this trade, but I still keep my credit overall. If we go down into this window in between, there's my max profit of $1,000. The nice thing about this trade is with spreads, I'm only putting up about $337 of capital. So not too bad. Over 46 days, this doesn't get me into September. I'm thinking we have a pretty solid runway through hopefully August. So I'm not looking for a huge move. Those deltas on that spread, this is an 11 delta and 8 delta. All right. I think I'm going to take this trade. So hopefully I can get filled here at 0.0095. Not tying up a bunch of capital. If I wanted more profit potential, now I can get up to $2,000 in profit for a $725 risk. I mean, that's 300% return on capital, which is not a bad trade, obviously. We have to see if price goes up. If copper stays where it is, I get paid about $250. If price goes up, I keep that $250. If price goes down a little bit, I might increase this to upwards of $2,000. And where's my floor? 4.20. So if copper is going to have some type of, dead cat bounce or maybe even a retest of these highs, I'm going to look to stay in it. So I like the trade enough so that it's not tying up a bunch of capital. There's risk on the trade. I get it. My max loss is $500. All right, I'm going to take the trade. So let me see if I can get these all filled. There we go. 0.0090. Let's try that right there. Let's see if I can get 9.5. pending. Okay, so not filling there. 9.0. Not filling there. 8.5. That's right below the mid price. Come on, man. Don't rip me off your futures market. 8.5 is not filling. So I'm below the mid right now. All right. This is, if I don't get filled on this when I'm, 10 points off the mid price, I'm just going to not take the trade. So this will be my final offer. It's not filling. Shoot. I mean, now the mids, hang on. I'm going to leave this pending at 0.90. I'm going to leave it pending at 0.90. If that gets filled, then I'll go ahead and fill everyone else's account as well. So never mind. I'm canceling that. I don't want to take it as a debit. I don't want to do a debit. I want to take it as a credit. So never mind. I'm out of that copper trade. I guess I can just do a credit spread, but that ties up a lot more buying power. So if I did the 420, and I'll move off copper here in a moment, but 420 to 415, $520 of buying power, generate about 20 to 25% return on that. Probability of profit's pretty high, probably an 85 to 89% probability of profit. The trade's out 46 days. Anything I can do with it? I mean, I could potentially roll this one. It'd be nice to do something like this. But now I'm going to pay for that trade. So I went from a credit to a debit. That's kind of like, how do I not turn this into? Oh, I got to turn this into 2. Let me see something here. If I did this as a butterfly, let me see if I can turn this 4.20 into 2 contracts. Interesting. That's a little tighter. I don't love it. All right. I keep going back and forth. I do like this trade. So if I did a sell put there, and then let me see if I did contracts to make this over $100. I don't love that. $420 to $415. All right, never mind. I'll come back to this. I don't need to bore you with my mechanics. D says, hey, man, I don't know anything about trading, but I will learn by watching this live. Well, if you have some questions, I'm happy to teach. So what do you want? I mean, there's tons of information you can take away from these live sessions. I do a lot of live trading in these sessions. I do a lot of live trading in my trading rooms. This is why I'm live for 4 or 5 hours a day. If you don't know anything, best place to start, come to these live sessions, absorb this information. My YouTube channel, I've got a ton of education on my YouTube channel. It is youtube.com/Chris Pulver. And you can, a good place to get started. I'm not sure what your asset class is. You want to trade stocks, options, you want to trade futures, crypto, you want to trade Forex. If you come into my YouTube channel here, go into your video section. Okay. I've got lots of videos here. So 506 videos. If you search in my section here, you can search for any of these. A lot of these are live sessions with Nick and the team, my Pulver report that I go live Mondays and Fridays. But if you want to search for something, search for 101. Because now you got a bunch of these videos. Okay. Swing trading, educational videos. There's a bunch of those in the playlist. There's probably 60, 70, 80 videos. Not to overwhelm anybody, just to say like there's information out there. Okay. So, and also if you watch my videos, leave me a comment, ask me questions, join my Discord. Why? Because all I'm trying to do is help traders out there. If you want to trade stocks, I trade stocks. You want to trade ETFs, I trade ETFs. You want to trade futures and options, I trade those. So a good place to start if that helps. Okay, cool. All right, sounds good. Good question. Thanks for being here. All right. I don't know why. Maybe it's because Frank's not on with me. It just seems like this session, maybe I've just talked 100 miles an hour, but we talked SPY, we talked NASDAQ, we talked Russell. I like the trades a lot. The market's clearly trying to fight back a little bit today. Look at our sell-off from yesterday when everything was all bizarro. The market's actually up, right? I'm sitting here with a fresh watermark high. That's good. Not going to complain about that. I'd like to put a trade on a copper if I can find the right price structure in my mechanics. But the SPY from, it was up all week with these steady little runs, and then one sell-off day, market's just not having it. So currency strength today, I mean, the Japanese yen has been all over the place. The SPY is trying to fight back. The NASDAQ is trying to fight back. NASDAQ is a little bit more of an uphill battle because of the severity of that sell-off yesterday. But it did feel like this kind of broader market. Look, you've got 70% of stocks advancing, 30% of stocks declining. Most stocks at highs, most stocks right now above their 50-day moving average and above their 200 moving average. That is the resumption of a buy zone. As a broad market goes, that's a pretty good sign with the advanced decline line up. Okay, so not too bad. But does it mean that we're going to break all-time highs again? Maybe. Maybe that's all the market needed. Okay, is it too late to invest in the AI bull market? I mean, no, because look, investing is never about, is it too late? If you believe in something and it's longer term, if you think AI is going to change the world, AI is a long-term play. Okay. I mean, there are probably certain stocks that I would take over others. I mean, look, I think NVIDIA, it is now outperforming Bitcoin as, the greatest asset of all time. Look, for the last 20 years, NVIDIA has been a freaking ridiculous asset. It has come from essentially tiny little stock to now our gargantuan, like, I mean, I don't know what it is right now, top, well, we know the top three. So Microsoft, let's check the market cap. Market cap of Microsoft is $3.38 trillion. Apple, I believe, was higher than that. Apple is 3.55. Good Lord. So Apple is number one right now. NVIDIA, even after a 10-for-1 split, doesn't change anything. We're at 3.22. Billions of dollars in market cap to $3.22 trillion in market cap. Look, NVIDIA has a great head start. The profit margins, the revenues, they're great. Earnings, we're going to find out what NVIDIA is made of because this thing has not missed earnings in a long time, and the market just loves it. But if we come into August and NVIDIA misses on earnings, maybe it all changes. Why? Because now it's going to have some competition. So look, I think the AI trade is here, but what's the way to trade it? Right now, AI is in a lot of places, but your semiconductors have probably been the easiest trade. Do I love this trade right now? Not really. You're talking about a move from 199, it's up 42%. Now, I don't like to buy things at highs necessarily, but who am I to say that SMH can't go up any higher, right? SMH might be going to freaking 300, right? SMH might be going to freaking 500. I don't know. But that's a way to get some exposure or individual stocks on good levels, good fundamentals, good earnings. One thing you have to remember on the stock market as an investor, it wants to go up, okay? The very true saying in the market is time in the market is better than timing the market. So for you to ask me, is it too late? Look, time in the market is all you need. If you've got a 10-year horizon, probability of making profits very high. If you have a 20-year horizon, there is no period over the last 100 plus years, okay? There's no period that if you've held stocks over a 20-year period that you have not made money. Even if you bought stocks in 1929, if you bought stocks in 1987, bought stocks in 2000, 2008, there's not a period, obviously 2008 to now is not 20 years, but my point is the market's designed in again, this is kind of incredible fashion, but the market's designed to try that positive drift and go higher. The tricky thing is if you get in now and somehow we're at a top and the market's going to go sideways or down, you feel like, oh my gosh, what am I going to do? This is why you got to learn how to protect your portfolio. I could buy SMH right now and do this. I could buy SMH right now at $277. And what would I do to protect myself? Well, I could buy it right now. I could go to a 270 and I could buy a put to be protected. And I can go up here out further to probably, let's say I did a 270 put for $7 a downside, and then I go up to 300 for a call. If I can get my call to pay for that put, I'm essentially hedged for free. So if this goes down, I can ride that lower. If this goes up, I get it called away for profit. I could do that over and over and over again. and have every trade that I'm in with protection. Make sense? So it's never too late. What is important is though, you have a plan. If I just buy this and it goes down 20% and I don't have any protection, I'm pissed about that decision. But if I buy it knowing that I can protect the downside and get an asymmetrical upside, if I can make 10% here for a protected move to the downside, just in case it goes lower, well, I lower my cost basis, right? And I own it cheaper. And then I redeploy another put, another call, give myself some upside potential, fade, or a favor the upside, do it over and over again. It's called collaring. That's a fancy way to trade with options. So you can do that on SMH. You can do that on most stocks. Any stocks that's optionable, any index, you can do the same thing. Okay. Now, I say that if you're going to trade options, you're controlling 100 shares. So if you just bought this and you're like, well, I've got $1,000, what do I do? Well, you trade 1 share of this, right? Or 4 shares of this and you're all in an SMH for that $1,000 investment. You can't trade options around that. Or if you do, you're using a little bit more leverage and you got to make sure those options stay out of the way. But you can finance this stuff. That is kind of the nice thing is like you're going to take some buying power, but let me just show you, all right? Let's say like right now on SMH. Okay, and actually, you know what? SMH is one, but also there's an ETF called BOTS. This is literally Global Robotics and Artificial Intelligence ETF. Where's this one at? Well, we had a peak here in March, and surprisingly, BOTS and Artificial Intelligence ETF hasn't made higher highs. So SMH, the semiconductor play, has made higher highs versus this. This is supposed to be the AI ETF. Okay. Can you post a link on the basic knowledge for catch up on your live stream? So if you're on the live stream, just watch the recording afterwards, I guess, if you missed the first segments this morning. I mentioned earlier, if you want to come to my YouTube channel, you can find out not just, live stream stuff, but also all my education that's like very concentrated into a subject. So when I talk about options, I have, videos called Options 101, Trading 101. Keep it seriously simple, stuff like that. I've got a ton of videos on that. So if I put money in and it drops, I can still go out with all of the input. That would make it zero. Well, it's not zero risk, but you're basically going to be able to move with price. So let's just use SMH as an example. Okay. Let's have a little teaching moment right now. And I'll show you exactly what this trade does. Okay. So if I buy SMH right now at 277.50, I will construct this trade for you right now. So if I buy SMH, I'm going to go into my Tasty platform here. This is my broker. If I go long the stock, am I missing something? Hello. I feel like I'm missing. Weird. All right. Maybe this is why. Futures. I feel like I'm missing something. I admit this might be on my computer. Anyway, let me go SMH. That's probably why. There it is, long the stock. Okay, so let's say that I buy SMH. Now, if I want to control, and there's 2 ways we're going to approach this. One is I have enough buying power to control 100 shares of options. And so if I cover this, I'm protected up and down, okay? But let's say that I don't have enough money to buy. I mean, how many of you out there, I don't care if you have a margin account or portfolio margin. I have both. I have IRA accounts, which are strictly cash accounts, so I can't over leverage those. I have margin accounts, which are roughly 2 to 1. And I have portfolio margin accounts, which are roughly 3 to 1, give or take. Okay. So if I buy, let's say 1 share, or I'm sorry, 100 shares at 277.25, if I have a cash account or an IRA account, it is going to cost me $27,000, almost $28,000 to take this trade, right? If we don't have that type of capital to allocate to SMH, then I'm not taking that trade and controlling 100 shares. All right. Now, here's what's kind of nice about this. If I can do this trade, let's position this like I can take the buying power. I've got $434,000 worth of buying power for my options. I have $668,000 worth of buying power for my stock. I could buy this ETF. I could buy this stock. I could buy a lot of things with almost 700 grand. Okay. So is that a big allocation? No. If I took that, let's take 27K, almost 28,000 divided by my total buying power. That would be a 4% allocation to my portfolio. Is it good? Maybe. The growth maybe outweighs the risk, but here's what I would do. I wouldn't just buy it with unlimited downside, right? I wouldn't buy it with the blindness of like, it's just got to go up. It's AI. Here's what I would be doing. If I did the 277, okay, I would go out probably 50 days here to the end of August, or honestly, I'd probably go out 70 days to get through what I think timing wise, we typically have a slow August. We have a lot of volatility around Jackson Hole. And then coming into September, we have the September effect, which is usually tax loss harvesting and seasonality. It's one of the most bearish months in the market. Now, is September always bearish? No. Is September always the worst? Not really. But it's known for having some spouts out of the summer, and it tends to be a sell-off month. So if I bought the shares of SMH for 277.28, what I would be doing is looking to protect myself. Now, if I want to go very tight, right here, okay, so pay attention to this. If I pay 277 and I buy a put for $13, you notice that my debit just went up to 290. So this is going to cost me money, okay? If I want to add protection, it's going to cost me money. So I'll type this out in yellow so you can see it. So 277 is the stock itself, is the ETF itself, okay? If I want to add protection, $13 to add protection. Okay, so this is going to be my insurance. Everybody follow me? So this would be the ETF. Type in a wire yes if this is clear. So if I buy the ETF, it's $277 per share. So I buy 100 shares, it's $27,000 and change, right? If I spend $13, $13 as an option contract is representing 100 shares of stock. So this actually cost me $1,300, which is going to put my total cost up to around $290. Right now, watch this. I need to cover for $13. I need to cover this and make it so it's essentially a risk-free collar, which means I'm looking at something to give me credit on the upside and let the ETF get called away, but I'm also financing my protection. All right. So I can go out. So if I buy the 275, and this is 275, so I'm protected within about $2 of price right now. Okay. So in the event that it goes down, I'm only sacrificing about $2 of movement. So if this stock dropped, and let's just put some crazy example out there. If this stock drops from 277 down to $200, okay. If we go from 277 down to $200, my put is actually worth, let's say we drop to $200, okay? The ETF that I buy is at 277, so it's down $77, but my put is worth $75. Everybody follow me? So this $13 that I'm paying for protection is actually going to be worth at least $75 of actual value. And so I can ride this thing all the way down to $200, and I'm going to be about $2 off of current price. So conceivably, I could be owning SMH at 202 with a break even if I ride with my put all the way down to that 200 price point. So I'm not getting, it's not risk-free. I'm still down a couple of dollars, but imagine being at 277, watching it drop to $200 and thinking, oh my gosh, I'm down 30%, 40%. Now what do I do? You know, most traders or investors look at that and they're like, I got to buy more. I got a dollar cost average out of it. You're just wasting capital, and you're throwing capital at something that sucks and it's down and it's turning negative. So this is why protection is important, you know, because if I can protect it on the way down, I can ride it lower. And when I'm ready to get out or you know, close out my put, I roughly know my break even. So I can take most of that run, not all of it, but I can take most of that run and do a pretty good job protecting. And if I did take the put off, what would I do? I would just do it again. And I'd still want to have protection to the downside in case the bear market continues, or still cover to the upside. Now, not done yet, because this is just talking about protection. Now to the upside, watch this. So if I went out to September to the 275 put, I'm going to go out a little bit further on a covered call. So I'm going to go out to November, give myself another, that's another 50 days, because we're skipping October for some reason. I'm going another 50. This will be easy. I'm going on another 50 days, 50 days of time. Okay. And I'm going to pair this with, if I buy the ETF at 277, what do I need to do to cover my $13 insurance? Right? I need to cover $13 of financing. Look at these covered calls. I could do a 290, I could do a 295, I could do a 300. Okay? So this is what I could do for essentially free. Okay? The ETF costs 277. I can sell a $300 call, which gives me what? Okay? This gives me $23 of upside. Okay? And I'm only giving myself $2 of gapping for the downside. Does this make sense? So I'm giving myself an upside that is way more favorable. And in the event that the market's going to sell off, I'm protected to the downside. Okay? But if SMH goes up, I'm going to lose the money on my debit for the insurance. So I'm going to lose the put side, but I'm letting this price run up to potentially 300 or higher. And I can say, look, I bought it at 277. Right now, I can buy the whole thing for 276.55. It's essentially a free hedge. Okay. Now, what is my upside? Well, if this ETF goes to $300, I'm going to make $23.35 per share. All right, I'm scribbling there, but everybody follow me? Type in a wire. Yes, this makes sense. Okay. So I'll make $23.35 as opposed to I'm giving the put side about $2. Okay. This is an easy way to protect yourself. Now, this is really mathematically simple. It's just addition to subtraction. But if you have the ability to trade 100 shares of something, you can use options because they represent those 100 shares. One contract and option represents 100 shares. All right. By the way, A1 Trading, Chandler, James, you guys are watching this. Like, feel free to splice this up. I feel like this is a really good education moment for a lot of people. I'm having some fun walking through this. So if this helps, I'd love to have like some shorts and like this thing spliced up just for my own reference, or I'll have to recreate the video. But anyway, this is what's fun about doing these things. So I'm protected the downside. And that way, if SMH goes to hell in a handbasket, I'm protected within about a $2 buffer. So I know it's not all of it. I know it's not fully protected, but man, I'm only giving myself about a $2 buffer and I'm protected for up to $23 of profit. So I'm protected to the downside, giving the market about a $2 head start, or I'm getting profit to the upside to $23. So you can see that I can program this in such a way that I get a favorable reward to a much needed and much more like peace of mind, right? Would be, I want protection. So that way, if it goes down, I'm okay. If it goes up, that's what we expect it to do anyway. And I give myself some upside where I can make more money. And so every position I'm taking, I do this. Now, I'll take this for, let's talk about this for like another 5 minutes. Okay. If I could not control 100 shares, meaning I don't have the money to put $28,000 into SMH and I can't trade 100 shares and I'll show you this too. Okay. Now you can't really read my beautiful mind scribbles here anyway, but I think we're good on the example. Now let's say that I can't take the 100 shares, but I can buy one share and I want to have some exposure on SMH, but I want to also lower my cost basis, protect my downside. If I own the share and it goes down, do I want to buy another? Like, let's say I have $1,000 account, which is tiny, but if all I want to do is, buy this hype of AI and buy semiconductors, I'll put 25% of my portfolio by buying SMH. I will show you how to use the same strategy, but let's check the buying power. That's what's going to be important, because essentially you're going to put on, well, it's a collar, but let me see what this is going to cost us to trade. It shouldn't cost us anything. That's the point. Okay. But it will tie up some buying power because we don't have enough to basically wash it. If I have 100 shares and I sell a call against that sell call represents those 100 shares. If I have one share, I'm only covering one share. So if I sell a call, that means that's 99 shares that I'm not actually owning. Does this make sense? So there's a lot more risk if I don't have the ability to have the shares outright. I'll show you. Okay, watch. Doesn't mean it's impossible. You just have to be a little bit more nimble on how you're going to craft this trade. Okay, so watch. I don't have the shares right now. I'm going to clear this whole position. Right now it's trading for 277. If I buy the stock and I go down to one share, okay? That one share is going to cost me $277. Okay? One share cost me $277. Now, if I do the same mechanics where I protect this below 275, okay? And then, well, let me delete this one and go back to that September hedge. If I did the hedge here to September at 275, there's my $13 debit. If I wanted to protect this, so I can go at the money, like $2 off, and I can go, okay, I mean, this is a fair way to do it. I could sell a call against it. No, that's dumb. I'm not going to do that. Okay, let me go out like I did before. Let's go to November. Let's finance that $13 position and give ourselves some upside. Okay, so right now, if I buy one share, it's $277. The debit on my September put is $13.05. Okay, so I need to finance this by $13.05 to make this basically a risk-free trade. So right now, I buy the 275. I go to November and I sell the 300. Okay, so I just went from I was supposed to spend $277. Now it's only going to cost me about $235. The problem is with this trade, if you don't have the buying power to take 100 shares, which would cost you $28,000, I'm still putting on trades with options that represent those 100 shares. Does this make sense? So this $300 call represents selling 300 shares of SMH. This August 30th, or I'm sorry, the September 20th hedge represents shorting $275 or 275 strike, the put. It represents buying that put. So this is me saying I'm directionally bearish at $275 on SMH. And at the same time, on the November, I'm hedging that position to say I want it to go up. But the issue with this trade is I don't actually own the 100 shares. So this is simply just a synthetic option trade that I can't have the stock get called away. Example, if SMH goes up above my $300 strike, you know what this broker is going to do? I own one share, and this represents 100 shares. If price goes up above $300, this broker is going to assign me negative 99 shares. I guess, actually, they'll assign me 99, but they're going to assign me at a sell position at $300. Okay? Do I want to short this stock or this ETF? No, I don't want to short it. So what we'd have to do with this type of situation is we'd have to be moving these, right? I want the protection to the downside, but if this is going to be threatened to the upside, I have to move this out, move this out, move this out. I never want this instrument called away. So if price is going up, you can move this put up closer to price, okay? And keep it collared, and then you move this up out of the way and try to keep it out of the way where it doesn't get called away. You don't want to get assigned short, okay? Because again, if in the situation, you don't have the buying power to do it, okay? All right. Trading for a living says, what ways do you suggest I could get that kind of capital? Keep trading. You know, my biggest run in trading for me that helped me get to my, my point of preservation of capital was, I had a very lightning in a bottle type year in a Forex market where I had about 20K. It took me about 12 to 16 months, 20K to 150K in a Forex account. Once I did that, I kept 50 grand in a Forex account, diversified into the other 100 grand in stocks and options. I've been trading that for the last, 10, 12 years. So, and I compound it and I grow it. And there's, I pay myself on some accounts. I grow them and compound them forever in others. So trading is what gets you there. And I'll leave you with this today. I've been going for a while, and I guess I'm the last guest. Nick didn't come on and kick me off like he did yesterday. Process equals profits, So, how do you get there? You keep trading. You figure out what works, you do what works, and you stop doing what doesn't. If you're frustrated out there with trading and you're struggling and you're making bad decisions, stop doing it. Trading, it's interesting. Like if you're just starting or you've been doing this for a while, it's like trading. You have to learn about yourself as a trader. You might think you know yourself as a person, but knowing yourself as a trader is very different. You take real money, real emotions. There's some raw stuff in there that you can't fabricate anywhere else. So it does help to, if you're trading real money, see what your emotions do. This is why I don't day trade. This is why I'm very particular on how I trade. I trade so my level of, day to day is very calm. I don't have a lot of ups and downs. I don't, my day to day life is usually pretty calm. I don't get stressed and frazzled about a bunch of stuff. I don't want my trading to do that for me. Why would I be like really calm and collected day in, day out, and then trading makes me like super volatile and emotional? I don't want to be that person, right? So you get to know yourself a lot as a trader. It will test you in ways you didn't think were possible. I've had countless sleepless nights, and I slept by my computer. I'm waiting for chart alarms, my phone, and setting, alerts on the hour. I've done all that stuff. So what do? Figure out the way that I can trade size wise, trade risk wise, where I sleep. It's a job, right? I love this. I can talk about this all the time, but I just focus on what I need to do to make money. Process equals profits. Okay. There's no home run trade. Somebody asked me a good question yesterday. I don't know if it's in this session, but somebody asked me like, why don't I make more money? You're talking about $300. I'm like, yeah, because I'll take 1,000 of those trades instead of one trade that's, I either, make 10 grand or I lose 10 grand. I'd rather, lose $100, make $100 and do thousands and thousands and thousands of trades, because that way one good day, one bad day doesn't define me, right? One good month, one bad month doesn't define me. I'm still here to trade. So process equals profits. And yes, you will learn things about yourself you didn't know as a trader. Not saying it's a bad thing, but again, tap into that and be self-aware, and that makes a big difference. All right. Cool. All right, everybody. I think I'm going to wrap it up here for today. Good little lesson. Great question. Great commentary. Thanks for joining in. And, Nick, team at A1 Trading, thanks a lot. It was a great week. Let's finish the week out strong. We'll be back next week for more. And I know they're running a special on Edge Finder. Jump in and grab it. You have any questions? Talk to a person, right? 55% off is ridiculous. They're fortunate. They give me a promo code if you want to get. I've got it on my Discord, but get it through Edge Finder. Talk to the staff. I've got a promo code as well. Promo code's Pulver. So anyway, have fun. Have a great weekend. Happy Friday. All right. See you soon. Thanks. Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.